Good morning, everyone, and let me first apologize for being a little bit late. Coming from Nicosia, there was a lot of traffic, indeed, to come here. It's a pleasure for me to be here today, and it's a great honor to welcome you, all of you, back to the IFX Expo here in Limassol. This year, let me see the slides. Okay. So this year is significant for CySEC and for Cyprus financial sector. We're marking an important institutional milestone for CySEC, reflecting on the role that CySEC has played in shaping, supervising, and strengthening the Cypriot capital market for over 30 years, safeguarding market integrity, enhancing investor protection, and aligning a regulatory approach with the European framework. Okay. We also meet at a time when the Cyprus Presidency of the Council of the European Union nears its conclusion, where we can look back at the role that Cyprus has played in boosting Europe's financial autonomy, having helped to deepen capital markets and advance the Savings and Investments Union. This is a significant EU initiative that is designed to ensure that private savings are channeled more effectively into productive business investments across the Union. Currently, there's an estimated of around 10 trillion of EU household wealth that sits in low-yield bank deposits, and the SIU seeks to provide the retail savers with easier, low-cost access to capital markets to grow their wealth and prepare for retirement. And let me pause here and just say a few things about what is the SIU, the Savings and Investment Union, and the market integration and supervision package that was proposed by the European Commission last December. And to take you a little bit back, more than 10 years actually, it was when the idea of having in Europe a capital markets union was developed. It was after we had the global financial crisis, if you remember, back in 2008 and 2009, and then in the aftermath of the global financial crisis, we had the banking union in Europe. And after the banking union, there was also the discussion of creating a savings and investment union or a capital markets union in the union as well. Through the last 10 years, though, that not a lot of things have happened basically to advance the savings and investments union. Europe lost part of its competitiveness to other jurisdictions, for example, the United States or the Asian countries. There were a couple of key reports that were published. One, you probably have heard of it, the Draghi report, Mario Draghi, and the other one, the Letta report, Enrico Letta report, which talked about the lack of competitiveness in Europe and what Europe needs to do in order to regain its competitiveness to other jurisdictions. And part of that discussion was that there's too much fragmentation, too many impediments to cross-border flows in the European Union. And therefore, we need to advance the Savings and Investments Union to create more integrated, harmonized, unified European capital markets. So that was the proposal basically that led to the initiative by the European Commission, and then the European Commission came last December with a package which was called the Market Integration and Supervision Package, which this particular package looks at both the trading aspects of the capital markets, the post-trading aspects of the capital markets, the asset management area. It looks also at the governance of the regulatory framework and looks also at innovation. So these are the different aspects of the package. For us, as part of the presidency, as part of the presidency of the European Capital of the European Council, we worked a lot in the last months advancing this package, which is expected to be finalized by the end of the year, and then if it's finalized by the end of the year, then in the next few years we will see major changes occurring within the European capital markets, which in our opinion, I think this would be something beneficial for including all member states, including smaller member states as well. So this is a few things just to give you an update of what's going on with the Savings and Investments Union. So now, boosting Europeans' financial autonomy is pivotal for a dynamic economy. Markets are having to adapt to significant challenges while also embracing innovation and opportunity in an era of rapid technological change and global interconnectedness. Technology, sustainability considerations, and evolving investor behavior are reshaping financial services at speed. But as European financial markets grow even more cross-border, complex, and technology-driven, the question of oversight has moved back to the top of the European agenda. So the role of effective regulation, therefore, is more important than ever. And again, going back to the proposal, which I'm sure that you probably know that within the proposal, there is also an element of what should be the framework of supervision within the European capital markets. And within the proposal, there is the item that basically looks at supervision of systemic market infrastructures, for example, trading venues, CCPs and CSDs, and those systemic market infrastructure entities in Europe will be, under this new regime, will be centrally supervised by ESMA, the European Supervision Markets Authority. And also, within this framework, there is also the supervision of the new entities, the crypto asset service providers. So at the moment, within the proposal, all the crypto asset service providers will be regulated directly by ESMA. My opinion is that to come to a compromise, because there are some objections to this particular proposal, to come to a compromise, what will happen is that the systemic crypto asset service providers, or I would say the large crypto asset service providers, those ones will be supervised by ESMA with a combination of the national competent authority, and the rest will be left to the national competent authorities. I think this will be the compromise that will be reached by the end of the year. All right. Now, CySEC has worked to adapt to the shifting requirements of the digital economy. We engage with emerging areas such as digital finance, fintech, and crypto assets with a clear objective to support responsible innovation while mitigating risk. We have also placed increasing emphasis on financial literacy and investor education, which I will come back to that shortly. In parallel, CySEC has strengthened its structured engagement with market participants and innovators to better understand new technologies such as DLT, distributed ledger technology, AI tools, RegTech, and digital asset infrastructure, while ensuring that supervision remains effective. We are, of course, also closely examining how the rapid adoption of AI may change asset management and market oversight. Our vision is to position the Cyprus securities markets among the safest, most reliable, and forward-looking investment destinations. And we pursue this vision by supporting the sustainable growth of our capital market and fostering trust, consistent with Cyprus' strategic priority of a resilient, competitive, and internationally connected economy with a focus of innovation and a high-quality financial services. We supervise, as you know, a large and diverse community of regulated entities, and to do so effectively, we apply a robust, risk-based supervisory approach supported by data-driven analysis, thematic reviews, and technology-enabled supervision. This helps us enhance monitoring, strengthen disclosure and governance expectations, and take targeted supervisory action where risks to investors or markets emerge. As a result, CySEC stands today as a resilient, forward-looking and fully integrated European supervisory authority committed to effective regulation, strong investor protection, and the sustainable and healthy development of the financial market. And as you know, we are active members of ESMA, the European Supervisory Markets Authority. We are also active members of IOSCO, which is the World Organization for Securities and Exchange Commissions. We participate in many of the committees of those organizations because we fully believe that a regulation should be there should be this cooperation among the regulators, and through that basically we can achieve effective regulation not only on a local but on a global scale. Now, turning to digitalization. The rapid development of digitalized financial products, including crypto assets, tokenized instruments, tokenized financial assets, algorithm-driven services, and platform-based investment solutions, is fundamentally reshaping the market landscape. These innovations offer clear benefits in terms of efficiency, accessibility, and choice. However, they also introduce new layers of complexity, opacity, and risk. Products can evolve faster than traditional regulatory cycles, often challenging existing frameworks and blurring the boundaries between financial services and technology. Digitalization also enables rapid scaling of both legitimate activity and harmful practices. Misleading promotions, market abuse, and fraudulent schemes can spread quickly across jurisdictions and platforms. So addressing these challenges requires robust regulatory frameworks, enhanced cross-border cooperation, and strong, consistent enforcement so that we uphold market integrity, strengthen investor confidence, and contribute to a stable and sustainable financial future. So, as we look ahead, please allow me to offer some reflections on what I consider to be three defining tests for regulators in the coming decade. Firstly, investor protection in the digital age. We are witnessing a profound transformation in the way individuals access and engage with financial markets. Innovation has broadened participation, reduced costs, and created new opportunities for diversification and inclusion. These developments hold significant promise for investors and for the wider economy. Yet this progress is accompanied by new and evolving challenges. The same technologies that enable access can also facilitate misleading practices, unsuitable offerings, and increasingly sophisticated cross-border fraud. It's therefore imperative that the regulatory frameworks evolve in tandem with innovation. ESMA has also continued to warn about the risks of online marketing of financial products, including the role of influencers and the need for clear, fair, and not misleading communications. So just as the investor protection sits at the core of everything ESMA does, it's what underpins and drives everything that CySEC does as well. So to meet this responsibility, CySEC has strengthened its supervisory and surveillance capabilities, making greater use of technology and data to identify and address risks in a timely manner. At the same time, we recognize that investor protection extends beyond supervision alone. Promoting financial literacy, particularly in higher risk areas such as the crypto assets, is essential to ensure that participation in financial markets is informed and responsible. We place a very strong emphasis on ensuring that the investors, whether are in Cyprus or abroad, understand the risks associated with investing in financial markets, whether at home or elsewhere in Europe, with particular attention given to high-risk areas, including crypto assets and online investment activity, where risks can evolve rapidly. Unfortunately, financial literacy levels remain stubbornly low, and it is the legal and ethical responsibility of every one of us, both the regulators and the regulated entities, to support and tailor our communications to the financial literacy of the retail clients. Second, innovation and digitalized products. Sorry, just a second. I should have this slide, sorry. Second, innovation and digitalized products. The development of the digitalized financial products, including crypto assets, tokenized assets, algorithm-driven services, and platform-based investment solutions, is reshaping how the financial services are designed and distributed. Alongside these benefits, these innovations can create complexity and new contact risks, including around transparency, governance, suitability, and accountability, particularly when automated processes or opaque models are involved. So in this environment, the regulators must strike a careful balance between supporting innovation on the one hand and ensuring that appropriate safeguards are in place on the other hand. So this requires forward-looking regulation, such as, for example, what we have in the implementation of DORA, the Digital Operation Resilience Act, effective product oversight, and a strong focus on governance, transparency, and suitability. It also calls for supervisory agility and a deeper understanding of technological developments. Cyprus has made significant progress in adapting to this evolving environment. CySEC has overseen the implementation of important regulatory developments across both traditional financial markets and emerging sectors such as the crypto assets under the MiCA, the Markets in Crypto Assets Regulation. We have also strengthened our focus on digital resilience and supervisory preparedness as European markets become increasingly integrated and technology-driven. Additionally, we have developed our own regulatory sandbox as part of our commitment to constructive engagement with fintech innovators. This supports responsible experimentation in areas such as blockchain or DLT, artificial intelligence, RegTech systems, and digital asset infrastructure, while ensuring that local supervision remains effective and aligned with the broader EU regulatory framework. And my third point is on market integrity. The proper functioning of financial markets depends fundamentally on fairness, transparency, and resilience to misconduct. As markets become more digital, interconnected, and fast-moving, preserving their integrity becomes both more complex and more crucial. So in this increasingly cross-border and interconnected environment, among the challenges is that divergent national interpretations and supervisory approaches can create fragmentation and inefficiency. Firms operating across borders may face unnecessary complexity, while fast-moving innovations such as crypto assets and AI are inherently cross-border in nature. So addressing these challenges requires robust regulatory frameworks, enhanced cross-border cooperation, and strong, consistent enforcement. And this is one reason why Europe is advancing the work on the Savings and Investments Union. And as I said earlier, the SIU agenda aims to support deeper, more integrated EU capital markets, improve the way that savings can be channeled into productive investments, and strengthen the confidence through high and consistent standards of investor protection across the Union. Now, this is a good moment to explore the specifics of the new regulatory implementation. Alongside the implementation of the SIU, ESMA is actively shifting from a mere coordinator of national regulators to a powerful central direct supervisor for the European Union's financial markets, which are what I was referring to earlier about the new governance framework in terms of supervision. The evolution of the regulatory landscape includes, as I said, transitioning direct supervision of significant of all at the moment, but I think, as I said earlier, the compromise will most probably be the significant or the large caps, basically, from the national regulators to ESMA. And ESMA jointly overseeing systemic market infrastructure entities, as I said, trading venues, CCP, CSDs, but also overseeing major ICT third-party service providers, such as cloud giants, alongside other ESAs, other European supervisory authorities under the DORA. And as green finance scales up, ESMA has also been appointed also the direct watchdog for transparency verifiers, including direct supervision of firms that are issuing ESG ratings to investors. In April, at the end of April, we also had the pleasure, you probably know about that, of hosting the chair of ESMA, Verena Ros, in Nicosia, at an event to CySEC's at an event for CySEC's 30-year anniversary. And it was interesting to hear her view of the impact of a more integrated EU market for smaller member states like Cyprus. Cyprus, she observed, is well placed to play a constructive role in promoting balance and inclusiveness, ensuring that the benefits of the market integration are shared across all member states. For firms in Cyprus, it means greater scale and new opportunities. A more unified European capital market can make it easier for local businesses to access a wider investor base beyond their domestic market. So separately, in the MiFID review, which has been concluded recently, ushers in a sweeping set of EU regulatory reforms, building on the broad protections provided under the implementation of MiFID II. Market abuse detection, mis-selling prevention, recording communications to detect any misconduct, and proactive surveillance are already long-standing the MiFID II obligations that have been in place since 2018. So this next phase sharpens the focus of behavioral risks by tightening rules around conflicts of interest, price opacity, and retail inducements. For example, it increases oversight of digital marketing, specifically regarding the thin influencers and social media, and investment firms are held strictly liable for promotional materials and face new requirements to display clear risk warnings. Other key changes include establishing an EU-wide consolidated tape to provide investors with centralized real-time access to market data and trading prices across all venues. And it imposes a ban on investment firms receiving payments for routing client orders to specific execution venues, protecting investors from hidden conflicts of interest. Crucially, it escalates the data mandate. Data incompleteness and a failure of inability to proactively detect risks are no longer treated as minor technical infractions. In this stricter regime, advanced AI systems will come into play with the requirement to automatically alert and flag compliance events in real time. But maintaining market integrity is not only about preventing misconduct. It is also about ensuring that the markets remain orderly, transparent, and worthy of investor confidence. CySEC approaches these challenges guided by enduring principles, independence in judgment, consistency in action, and a steadfast commitment to continuous improvement. In doing so, we reaffirm our responsibility not only to regulate markets, but to uphold their integrity strengthen the confidence, and contribute to a stable and sustainable financial future. Finally, I want to talk a little bit about AI, artificial intelligence, and its use in our sector. AI is no longer a future challenge. It's an immediate priority for the regulators. We see its use increasingly present in financial markets, in financial services, and it is being adopted across a range of activities, including customer interaction, risk management, compliance, and elements of the investment process. At the European level, AI is being addressed both through horizontal rules and through sector-specific expectations on governance, risk management, outsourcing, and disclosures. Regulators across Europe, including the European Authority, ESMA, and the national competent authorities, are focusing on accountability, model risk, and robust controls, monitoring the AI adoption to ensure that the risks are understood and managed, particularly where AI may increase the complexity, reduce the transparency, or introduce new forms of concentration risk. AI can also support supervision and compliance by improving the ability to detect patterns of misconduct, fraud, or market abuse. But the increased use of AI must go hand in hand with robust governance, accountability, and appropriate controls. So, in conclusion, the rapid development of digitalized financial products is fundamentally reshaping the investment landscape. While these innovations, they offer clear benefits in terms of efficiency, accessibility, and choice, they also introduce new layers of complexity, opacity, and risk. Products can evolve faster than traditional regulatory cycles, often challenging existing frameworks and blurring the boundaries between financial services and technology. In short, digitalization enables rapid scaling of both legitimate activity and harmful practices. So addressing these challenges requires robust regulatory frameworks, enhanced cross-border cooperation, and consistent enforcement, while upholding market integrity, strengthening the confidence, and contributing to a stable and sustainable financial future. So I would therefore like to assure you that us, CySEC, will remain fully engaged with these developments. We are committed to embracing the technology, to maintain high standards, to support markets that serve the real economy, to protect investors, and to preserve the market integrity. And I would like to thank you for your attention.